not too long after the great financial crisis of 2008, here we are again in another banking crisis. However, the big difference this time is that the general public now have an alternative to the traditional financial system, aka Bitcoin and crypto. And as the banks fail, crypto goes up. And as the bailouts begin, crypto goes up. And as QE under a different banner begins, you guessed it, it's sending crypto soaring. In fact, the more that the traditional financial system struggles, the more it legitimizes crypto, which has never skipped a beat and does not require any bailouts. Now, this video is all about answering the question, how do we make the maximum amount of money while the traditional financial system fails? We'll be getting the latest thoughts and insights from Raoul Pal and covering three main things. Firstly, to know how to fully capitalize on the problem, we need to fully understand what is going on. Then, in order to get the very best gains, you need to know who you are competing against. And then we'll finish up with what is Raoul doing to maximize his returns over the coming year. As always, if you do enjoy anything in the video, then drop a like, and a big thank you to everyone who does. Okay, first up, to fully capitalize on a crisis, we need to fully understand the problem. So let's begin there.
Okay, it's actually really simple. So there's two levels for what a bank is. It is the deposits that they have, that's what makes them a bank, and then it's what they do with the deposits, they invest them. So in a normal course of events, banks make business by something called the steep yield curve. So they borrow at, let's say, 2% interest rates, i.e. they pay you 2% on your deposit, and they lend it out to the market at 5%. That's the yield curve. So that's a longer term duration that they take the risk on. The issue is the yield curve got massively negative. In fact, the second most negative yield curve since 1980. So that means that the banks ordinarily would have to pay you 5% or 4% interest on your deposit, but then they invest it in the bond market in 20-year bonds or 10-year bonds or 30-year bonds, and they're actually getting less money. So they're losing money every day. The issue is people have the freedom to move their deposits. So they can move their deposits out of this 0.5% world into a 5% world of CDs, Treasury Direct, money market funds. That means deposits shrink from the system. As they shrink, you have to unwind the bets that you had at the long end, the longer maturity bets. Now, the problem is those are all underwater because the Fed raised rates so much. So then they've got losses, mark-to-market losses. But to collapse the deposit base, you have to realize those losses. Suddenly, poof, they're all got no money. So that's the real issue here.
So, with the Fed raising rates at the fastest rate in history, this has essentially screwed the banks, and as Raoul says, poof, now they don't have any money. And so the Fed is forced to do QE, but under a different banner, which has already begun. In fact, they've printed half the money which had taken them a year to reduce in just the last week, which is crazy. And so to make money from all of this, we need to understand what are we competing against. And the answer is the central bank's balance sheet. We need to outpace the debasement of currency. Or you could have assets which are rising in dollar terms, but you're still getting poorer. And so the big question is, which vehicles are going to outperform the printing of money?
Generally speaking, over time, the observable relationship, because it's a 97.5% correlation between the G5 central bank balance sheets and the S&P 500, is every time it grows by 1% or shrinks by 1%, the equity market moves by 2%. So we've got a clear relationship. And so, I don't know, we just increased the balance sheet by whatever it was, 5%, let's say. So therefore, equity markets go up 10%. That's roughly how it works. However, NASDAQ goes up at a multiplier of about 1.4 times the S&P because it's got a technological uptrend, and it's probably accelerating as AI, robotics, and all of these things come in. And crypto's got a much bigger multiplier. So assets will go up according to the balance sheet. I think the balance sheet goes up significantly, 30% plus over time. Therefore, the equity market can go up 60% in the S&P, maybe more. So new all-time highs in the next 12 months or so, maybe a bit longer.
So what he's saying is that when the central bank prints money at a certain rate, the S&P should double that performance, the NASDAQ will do even better, and crypto does the best. And did you spot the huge contrarian call that he made in that clip? He said, based on that logic, we'll be seeing new all-time highs in the stock market in less than 12 months. And this means crypto is going to the moon. Okay, and this brings us nicely on to the final segment, which is what is Raoul doing to maximize the amount of money he makes over the next 12 months?
At a top level macro position, I haven't cashed out of a single penny of crypto. And all I've done is use the cycle when the liquidity cycle hits the long-term uptrend that started happening in June of last year to just add to my positions. That's all I've done. Now, there are some trading opportunities around like bonds, because I think bond yields go from 4% to 1.5%. So can you make money? Will you make more money in crypto? For sure. But people don't want the risk, and people are such dicks online about the kind of risk you have to run to do it, that yes, there's traditional answers. You could buy gold, you can buy bonds, you can probably buy technology stocks, or you can buy crypto. And you skin the cat any way you want it in terms of what risk profile. And I've talked about my risk profile is, I have income, I have assets that are paid for, so I can take more risk with the liquidity that I have.
Over the past 12 months, the Fed's increased interest rates at the fastest pace in history, and this has led to another banking crisis. People have been taking their money out of bank accounts where they're getting 0.1% and into bonds where they're getting close to 5%. And the Fed has quickly had to reverse their QT policy, printing $300 billion in just 1 week. And today announcing opening swap lines which can bring trillions of new dollars into the system. And as investors, the key is to be able to outperform the printing of money. And based on your own personal risk profile, we have a number of options. To take the least amount of risk, you have bonds. For more risk, more return, you have gold. Then a good play would be technology stocks, and for the biggest upside potential with lots of volatility on the way, you have Bitcoin and crypto. So there you are, guys. Hope you enjoyed. Now, these certainly are crazy times, and for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.